Hello, it's Robert Miner with Dynamic Traders Group with today's DT 5-minute update and trade strategies. We're going to take a look at two or three markets that have what I think are good trade opportunities this coming week if they get the proper triggers. So I'll let you know what those triggers are, which markets are in a position, and the triggers. So we do make these videos, short videos every week for our Twitter and YouTube followers. And if you want to learn more about the trading strategies I talk about, real practical fib time and price and multiple time frame momentum and specific entry exit trade management, take a look at my book, High Probability Trading Strategies. It's a heck of an education for very little money. Okay, let's get started. The first market we're going to look at is notes, and of course, whatever I talk about notes applies to bonds. This is the weekly chart. Weekly momentums are dual look back bullish from the oversold zone. And this past week, while notes made a slight new low, they came up very sharply near the end of the week and actually closed the week higher. So if we take a look at the close only chart, we'll see that, of course, last week didn't come anywhere near making a new closing low. Close onlys are the most important charts that you can look at, daily or weekly. So we could still just have an ABC. I just labeled it A, B, C, D, E since we made a slight new low. Bonds didn't make a new low. So again, I think there's a lot of buying coming back into the market after the Fed announcement last Wednesday. And certainly on the weekly basis, it's a setup for a buy. The confirmation of a continuation of the bull trend will be a weekly close over 129.14. Let's take a look at the daily chart. So again, here we had this day after the Fed announcement just dove down strongly, and then the next day we call this a snapback reversal right from the 100% alternate price projection and right from the December 12th to 13th time target to complete a low. And again, we came up and closed up strongly above all these recent closes, all but the one swing high close here at 129.09. And again, close above that on a daily basis. That'll complete the complex correction. So where are we at? We've got weekly momentums bullish, daily momentums bullish. We've come back and we closed higher. I think we're in an immediate position for long trades, so you should consider that. And of course, if you don't want to do leveraged futures, consider like TLT, for instance, unleveraged. Because what's the probable outcome? Well, if this is a correction as shown, and it's completely a corrective pattern, there's no mistake about that. It depends on whether it's finished or not. I happen to think that it's probably finished. Well, eventually, a long trade could go ahead and continue above the September high. That's what follows a correction, is a resumption of the trend to a new high. So that's the possibility. At the very least, 2 to 3 weeks net bullish. So immediate position, consider long trade in notes and in bonds. And I think it's going to be a great trade with very minimal, well-defined capital exposure or risk. This is the ES and stock indexes ought to top next week, make a weekly high. The weekly momentums have been overbought for so long that they're not of any use to us right now, other than we're past the typical time period to make a weekly high. So as W.D. Gann would say, time is running out. But what's more compelling right now is since we made this new high last week, two things occurred. Number one, it now fits into an almost ideal 1, 2, 3, 4, 5 wave pattern. And of course, when this fifth wave is complete, that completes the advance from the October high. Then we should be sideways to down for 3 to 4 weeks at least. That would be the minimum time for a correction. The other thing is we came up and tagged on Friday the 127% external retracement of the wave 4. So I did a special tutorial for subscribers this week on external retracements and when you use them, how you use them, and how valuable they can be. But just we'll make briefly say that we've hit the typical end of wave 5 target zone. Doesn't mean we're finished. I think we might have a couple days left, sideways to up. The daily momentum did reach overbought on Friday. There's some intraday patterns that suggest we might make a new high over Monday and Tuesday, maybe another day or two, sideways to up, and a daily close below 31.46 indicates that this section is complete, which indicates this section is complete, and that would be a weekly high. So just keep aware of that this coming week. Gold has been performing almost exactly as anticipated this past week. Really an important week potentially. Dual look back momentum bull reversal on the weekly data. That is important, and we closed above the closes of these last several weeks. So more than likely this wave 4 correction is complete. Here's the daily data. Each time we've made a daily momentum bull reversal, while this weekly has been oversold or bullish, is then we have about a 4 to 6 day advance. We haven't had strong follow through yet, but we had another setup this past week following this bull reversal in the daily momentums, and it's not overbought. We should be sideways up for another day or two. Got 16th and the 17th, Monday, Tuesday, as a probable daily high, and a close above 1484.40 will be a further confirmation that the higher time frame trend is bullish. So anytime we make a DT oscillator or whatever your favorite momentum indicator is, we make a bull reversal in it, as long as we remain above the prior swing low like we've done these last 2 times, that's a setup to enter with very, very minimal capital exposure, with high probability trade to eventually continue to above the September high. So take those setups and just put your stops in. It's well defined right now. We close below 1465.10. Then something else is going on and we're out of the trade. And since we entered it the day after this low on November 12th, our DT report, a trade alert subscribers anyway, that was the recommendation, is we're still hanging in there and a little bit of a profit, and we're getting that stop right, almost up to break even now if by chance gold should tank and make a new low. So great setups in gold. Don't pass them up. You don't have to go highly leveraged. There's the GLD and other ETFs that are either low leverage or no leverage to take advantage of these setups. That's it for today. Hopefully you have a fantastic week. And again, check out our DT reports if you really want to keep updated every day in detail with these and other markets. Take care.